Okay, very good afternoon, ladies and gentlemen. Really a big thank you to ST Property for spending such a great effort to organize this. And if you have noticed, they happen to always organize seminar at the right timing. Example with what Malaysia have just announced of the GST. So my segment is on financial, but because around the world, especially in this region, governments has been trying to combat the whole rising property prices. There's so many policies that is being implemented. So what we like to first share with you, our very favorite page, disclaimer. The reason is that there are so many policy changes, really it's very confusing. For example, let me ask you, if you look at these slides, how many of you actually will be able to pick up what does all these things stand? ABSD. Actually, official term is additional buyer stamp duty. Unofficial term is another big shot for developer. How about SSD? Seller stamp duty. But do you know what is the percentage now? Then market talk, SSD stand for seller sure die. Then LTV, loan to value. It depends on how many properties you have in Singapore, 1, 2, 3, whichever. So on market talk, this is called learn to vote. And then of course you have the LRT, which is the loan repayment term, because now everything has been changed. Example, HDB, they have just been reduced from 30 years to 25 years for HDB loan. Then for bank loan, there's another change in terms of the LTV. How about MSR? Mortgage servicing ratio, market talk, mortgage share reduce. And finally, TDSR. It stands for total damage to Singapore residential. Now, it's very easy for us to talk about all these terms in a very tongue-in-cheek kind of manner, but it really is not easy for regulators to find the right equilibrium, to find the right dosage. So with that, actually our Singapore government has won international praises for able to do all these things. Really, our government has been praised for having the resources, for having the capacities, for having the guts, and the system to implement wide range of cooling measures. Now, as much as a lot of them are uncomfortable for some property investors or buyer, but I think it's necessary because no government in the world want to kill their property markets. What they want is to ensure a sustainable growth. So let's look at some of the stages of cooling measures from what they have actually introduced in 2009 by removing the interest absorption scheme, to introducing seller stamp duty, lowering the LTV, and increasing the SSD period. Then in addition to that, you have the 2011, and of course this year, which is the one that has changes into the ABSD. Now TDSR was introduced in June, but government mentioned, and they have been very clear, this is not a cooling measures. I will talk about a bit on TDSR later on. But I want to show you these slides. Because of the introductions of ABSD and SSD, and then they have actually changed the numbers. A lot of buyers and sellers now, they are confused. Because this year, based on the clients that we are seeing, there are people who are actually got into trouble because they were not clear about the results. For example, just about last week, I have one client sold a property, but forgotten that they bought this property in 2011, which means to say they trigger a seller stamp duty of 8%, and the amount that they have to pay is 100 over 1,000. That is the kind of seller stamp duties you may have to pay. Then for ABSD, it depends whether you are PR. If you're buying your first property in Singapore, there's also all these fees to pay. Then ABSD is very interesting because Hong Kong decided to follow suit. Then today, Straits Times, Australia is now proposing that they should also impose ABSD. So Singapore, actually, we do export quite a lot of things. Then, of course, the LTV. Just to check, right, if let's say you are to use a company to invest in residential property, what would be your LTV? Actually, your LTV is only 20%. Yes, your down payment is 80%, which means to say it's a huge sum of money. So if you are buying your second and third property, do factor in the LTV because you will have to come out with a lot of cash. I mean, that's also one of the reasons why people are going to overseas properties, because with the same amount of cash, they can now buy more overseas. But if you look at all the cooling measures that has been implemented, it seems like every time they introduce cooling measures, instead of cooling, they push the market higher. But that is because it's not cooling measures trying to kill the market. It's that the market is already on a rising trend. But cooling measures is to ensure that the market don't get overheated. And then if you compare with the red color, which is the STI index, you see that our property price index has actually gone up a lot more. So in the last few years, right, it's very clear, property is definitely the preferred asset class. And it has given investors much better returns with lesser volatilities. For those of you who invest in stocks and shares, I'm sure you agree with me, stock market is very, very hard attack. And that is why people are changing, are focusing. What we are trying to share with you here is that we are now in an uncharted territory. Will the property price continue to perform better than the stocks market? We will discuss that in a short while. But one of the key reasons why government are concerned, and one of the reasons why they are introducing TDSR, now they can introduce ABSD, they can control SSD, they can remove all these things later on. But one thing they cannot control is interest rate. Why I say interest rate? Because Singapore, we are a small economy, we follow US. And you look at US federal interest rate. Now, currently US federal interest rate is about 0.25%, which is the all-time low. But if you look at their average, on the average, US Federal Reserve rate should be in the region of about 5%. So now at 0.25 to 5%, can you imagine how much more they can go up? So if let's say the interest rate is to shoot up extremely, it becomes a problem. It becomes a big problem. And this is what our government is very concerned of. Then of course you look at the US QE policy. Some people say QE is Queen Elizabeth. No, it's actually quantitative easing, because this is something about US printing money. Okay, or they say they are injecting 85 billion a month into the world. Now, this 85B is going to go around the world, which is why this is called hot money. And 85 is only 1 month. If you multiply with 12 months. So personally, I'm actually quite disappointed that the US did not taper the QE, because it created a lot of uncertainty. Interest rate has already been so low. If you look at here, it has been so low since 2008. It has become what we call artificially low. So when the interest rate start to move up, it's something that we all have to be very concerned about. Then let's look at Singapore. As I said, Singapore, we follow suits to these world leaders. And if you look at our interest rate, it's the same. For the last 5 years, it's been trending low. Currently, it's less than 1%. If you take a 3-month SIBOR, it's less than 0.4%. However, if you look closely, the average interest rate is about 3%. But that is SIBOR. And for the banks to charge you for interest rate, they will take SIBOR plus a premium. On the average, it's about 1 to 1.5%. So let's take 1%, which means to say, eventually your interest rate may go up to 4 to 5%. Let's look at this table. Imagine a 500,000 loan. At 2% money installment is 2,005. What if the interest rate goes up to 5% or even 9%? How many of us will be able to shoulder this change in interest rate? So this is something that you will have to focus on, and that is the main reason why government introduced this TDSR. If you have come for the previous seminars organized by ST Property, we have actually covered on this. However, because a lot of buyers are still very confused with the whole structure. Example, we just did one case which involved industrial properties for a client. It took him 1 month, 3 days to apply for the loan. And the buyer did not expect this kind of problems, because all along, good income, good credit conduct, he never had any problems. But when he put down the option money, he started to apply for the loan, and he realized that, hey, all of a sudden the rule has changed. So although we managed to get the loan for him within 1 month plus, but there was a lot of stress. Why stress? You just imagine you put down option money, then when you cannot exercise the options, what do? you extend, right? You try to request for extension. The seller in this case is very concerned because the seller is, what is this buyer trying to do? Is he trying to pull a fast one? Because is he trying to buy time so they have to flip the options? So what if the seller decided, no, I do not want to extend? Then the buyer will lose the option money. So this is a situation you do not want to be in. So let us just run through very quickly an overview what is the TDSR and how it will actually affect you and how can you be prepared and better geared towards it. Now, one of the key fundamental things, TDSR is here to stay, long-term one, right? It's not cooling measures. MES will not remove, they will only adjust what is the framework. Second, they standardize lending practices, meaning to say now Bank A, Bank B, Bank C, the same practices. So one of the fundamental things is this thing called debt servicing ratio, 60%. So all your debts over your income cannot cross 60%. In addition to that, the bank need to verify. So you have to organize all your housing loan, car loan, personal loan. The problem is that you need to produce loan statement. I'm very sure most of us don't keep our bank statement, our loan statement. Right? According to our survey, 80% don't keep the loan statement. 15% we keep the loan statement, but we don't know where we put. Then 5% we keep for hobby. And normally the 5% who keep for hobby one don't have problem. So bottom line, most of us would have problem. So you need to now go and sort out all your loan statement in order for you to apply your housing loan in a proper manner. Then addition to that, because banks are supposed to tally with your credit bureaus, you cannot say, I don't declare, I don't tell you this, whatever, sorry. Because everything can be traced from the credit bureau. As long as you have a loan from a proper financial institution in Singapore, everything will be captured. Right? The only loan that is not captured there is whatever you owe to loan shark. But of course, you have a bigger problem than that. Then in addition to that, credit bureau now have a credit score, which they will be able to determine, they can even predict what's your probability of you going default. So can you imagine when you apply loans, if you have a lot of credit facilities, some of your credit records shows that you can have a high chance of going default, don't expect to get the loan. So now it's important that you do in principle approval before you go and buy the property. Now the other thing is income weighted. In the past, father and son team, and that's what a lot of parents do. When they cannot get the loan, they bring their children in. They bring their daughter in. Of course, they can even try to bring their maid in. But now you have a problem. You have to combine the income. So there's this thing called income weighted. Right, let's look at how it works out. First, you look at the age of the son and the income. First step, what you need to do is to take the salary of the son, divide by the total salary, then you have to multiply with the age of the son. Then you plus the father one. Okay, everything you work out. So in this case, you get 43.33. Which you can say the average age is 43 years old. But that's not all. Step 2, you have to take 65 minus 43.33, you will get 21.25, which then you round down to 21. So in this case, instead of 30 years loan term, 21 years. What if the son's income is 2,000? The ratio will drop to 18. My friend, if you find this confusing, there's some more to come. Because this framework itself involves a lot of mathematics. Someone got ratio, then you have to work backwards. The only thing I must say is good for our business. Because Singapore is a financial advisor, so people come to us for financial advice. Now look at this table. Let's focus on the before TDSR. So in normal since previously, the father and son team, they can combine, make use of the son age, then they can buy something $2 million. No problem. Clear. But under the TDSR framework, let's look at here. Why is it 3.5%? Because MES says so. This is the interest rate they have to compute. But if it's commercial industrial property, 4.5%. Then instead of 30 years, you have to use 21 years. Because why? Based on the formula that we have inputted earlier on. So in this case, the money installment is 8,009. So 8,009, you hold it there first. Then you look at the TDSR. How do you get 9,000? 60% of the combined income, 15,000. Then how do you get 6,500? You take 9,000 minus away the commitment, 2,500. In this case, this person is not so bad. We have seen cases where car installment itself is really 3,000 plus. So you are not going to get the loan very far. So in this case, 8,900 and 6,500, what does it mean? Do not approve. Loan rejected. You then use this 6,500, you work backwards, you can only get 1.158 million. So in these instances, definitely got impact. Previously, all you need is 20% of $2 million. Now, not only that, your loan has been reduced by 400 over 1,000. Not that you cannot buy, but basically, you will need to come out more money. But can you see the whole rationale for this TDSR framework? Because our government is concerned about the interest rate spiking. So what they do is they try to help you to take away the loan part so that you don't be too overly leveraged. So this is a nutshell. Then you can see 30%. There's a 30% haircut to your commission income if you are self-employed, running business, rental income also. But in this case, that's why I have a few real estate agents coming to me. Alfred, this year I'm going to declare 200,000, 300,000 income. I say, you're so good, you already know how much you make. Say, I don't know. In fact, actually, I only make 100,000. But why you don't declare more? I declare more so that I can get the kind of housing loan I want. Well, I tell you, it's very brilliant. No? People last time under declare, now all over declare. So that's why next year, I think our tax revenue will increase. So under the MS part, because of 30%. So if you are buying HDB flat, you also not only have to factor in the TDSR 60%, you must first qualify for the 30%. Actually, if you find that I'm talking like running, it's really true because I'm trying to rush. And then you will see me panting more. But because we are trying to share with you as much information as possible within a short period of time. So in this instance here, everyone is affected under the TDSR framework. Unless you are using your businesses to buy commercial or industrial businesses for your business need, then you are not subject to TDSR. So therefore, if you want to buy even industrial commercial properties, make sure you have done your proper homework. Now, HDB measures, there's a lot of things about the HDB policies that is being measured, that's being introduced, but I just want to focus on the mortgage loan term. So this one has been reduced to 25. Again, I show you this example. This person buying 400,000, 4,000 salary, over here, 3.5%, 25 years. Can you see the loan that he can only qualify? 239,000. So there is a very big drop from in the past where you can get 80%. But if I just compare to just previously, where he can get a loan term of up to 30 years, the loan that he can get is 267,000. So therefore, there's already a drop of almost 30,000 in terms of loan quantum. I find that in the long run, okay, or in time to come, there will be impact for this area. If let's say the HDB owners cannot sell the flat at the price that they want because people are not able to get the loan to buy the kind of bigger flats that they want, then the whole price is going to be affected. Suburban condominiums will be affected. So there will be some form of trigger effect. So TDSR framework do have a lot of impacts that yet to be seen in the market. Another good thing about ST Property, you can go to their Just Ask, then you can pose your questions. Normally, if let's say there's more difficult questions, they will ask me to look at it. So it's actually a very good way for you to get free advice. So over here, this person, 15,000 commissions. Now 15,000 income is actually a good income. But because remember we talked about the 30% haircut, so therefore his commissions income is only 10,500. Then the loan commitment is quite high in this case. So he's trying to buy something 600 over 1,000, which we tell them, say, cannot. He cannot qualify. But you notice he has this 100,000 financial assets. What is this thing about? This is something that you can actually factor and think about it if you want to increase your loan eligibility. What do we mean by that? Let's look at this table under the asset-based lending. This table here shows that this person is pledging a fixed deposit of 100,000 and a unit trust. Now, when you have the chance to understand this in more details, what they are trying to say is that if you are retired or if your income is not strong enough, but you can show certain financial asset, you can use this formula where they will take 100% of your fixed deposit, and then they will take a 70% haircut of your unit trust. They will combine the value. So over here, you will get 124,000. So you take 124,000, divide by 48 months. Why 48 months? Because MAS says so. But it's also to reflect the seller's stamp duty period. So therefore, you will get an income stream of 2,005. Then you multiply with 60% TDSR. Then you work out your $1,550. That for your monthly installment to factor in. So to give you an example, if you are buying a property $2 million, then you are coming out with 30% down payment, right? The borrowing is 1.4 million loans. How much financial asset you must produce, assuming you are not working? You will need to show 649,000. So 649,000 plus the down payment of 600,000. Now you need to come up with 1.2 million in order to buy something that's $2 million. But this is still helpful for those of you who are retired or who has been under declaring your income, and you have certain financial assets you can then produce. So again, got impact. Then another question that was raised under estate property, is there estate duty? Now in Singapore, there's no more estate duty. However, with the introduction of ABSD and SSD, there are some impact. Ever since they introduced ABSD and SSD, I mean, many people has died. No, I mean, of course, people died in the natural cause. But imagine when a person passes on, they want to pass the property to their beneficiary. So how does ABSD and SSD affect them? The law has actually fine-tuned, revised. ABSD do not affect if the property is being distributed intestate or testate. However, TDSR framework, there's impact. Why? If let's say the person, the father, have this property, then has a housing loan. So when he pass on, he pass it to the beneficiary. The bank will need to qualify whether this beneficiary qualify to take over the loan. So if let's say this son's income cannot support, then he will not be able to allow to take over the property. Then he will then have to ask to force sell. Force sell that time, they will then have to check when did the father buy the property. So if the father buy the property subject to SSD, then the beneficiary have to pay seller's stamp duty. That is why nowadays beneficiary want to get property, they first ask, got loan or not? Got buy insurance or not? If not, you give me, I told you no. Really, because you cannot take over the loan, then you have to force sell, then you have to pay the seller's stamp duty. Right, so this is something that has introduced, and a lot of people didn't realize the implications. So of course today I hope to share with you something. Now, because you are here, there's a lot of overseas properties exhibitions going on. And for investing in overseas properties, one of the things I always urge is for you to factor in currency. Factor in currencies. And of course, I think for Singaporeans, one of the favorite places will still be Malaysia. And there's a lot of feedback is that, oh, Malaysia, I'm not so sure. How about the ringgit exchange rates? As much as it's very strong for Sing dollars to buy, but how about when you want to sell? So I flash out this chart. If we go back to 1992, one Sing is about 1.59 ringgits. During the financial crisis, 3.2, and finally, now it's about 2.5. So if you spread it out, you stretch it out, and you see what is the implications, right? Over a 20 years period, Sing dollars has appreciated 60% against ringgit. But if you spread it out, not so bad after all. So one of the things I see positive in Malaysia introducing GSTs is that if they can use this to reduce their subsidies and to increase their revenue, it will be helpful for their currency. So in the long run, right, that is something that it can balance off. Because for Singapore, we will always pursue a strong Sing dollar policies. We have no choice because we don't rely on interest rate for monetary policies. We rely on exchange rate. But on the other hand, exchange rate is also something that will always help our property market. Because even for Malaysians, if they buy a Singapore properties, just on exchange rate itself, they will have benefited. But the biggest beneficiary is who? Indonesians. Because if you go back to 1992, where 1 Sing is equal to 1,002 rupiah, now it's 9,002. 600% growth. Even our property market do not go up. Just on currency itself, they would have already benefited tremendously. But of course, our property market actually gone up. So going forward, where do you think you should put your money? I thought I want to just draw the reference towards STI and our URA price index. Now, STI, as you can see here, is very volatile. But on the long run, it's an uptrend. Then let's look at our URA price index. Although it's not as volatile as the property stock market, but that's because the prices are not reflected on the daily basis. And then in addition to that, our URA price index actually is not that smooth sailing also. Actually, if you look at Singapore property market, it's also a roller coaster ride. That is where our government, learning from the experience, they try to spread it out so that to make it not so volatile. So in the long run, right, in the long run, I think now for property market is back to fundamental. Gone are the days where you have a very sharp increase. Because if you look at this trend, this table, the next time, if you observe from 2002 to about 2005, when the property market is sleeping in a doldrum, plus a low interest rate environment, where you can pawn whatever you have and put inside property market. But I think now you have to be more careful, understand your financial status, and then comparing this. But if you look at this table, I think it still gives you some comfort. Even if you pick 15 years, that means that was about the Asian financial crisis. Even if you have bought the property at the peak over a long period of time, you are still able to get a positive returns. But definitely, nobody wants to be stuck for such a long period of time. So therefore, whatever it is, right, there's a lot of experts sharing all their views, something you should really look at before you go into it. But I would urge you to do a financial health understanding. That means to say understanding whether you can afford, whether you can qualify for the loans. So today, we'd like to share with you this financial ratio table, courtesy of Masing. So there's a lot of Malaysian developers around. Later on, I would urge you to go to their counters to look at their projects. Because being a responsible developer, they also want you as a potential investors to know whether you can qualify. So you can SMS to this number with your email address. We will send you the financial ratio for free. It will help you to understand whether you can qualify for the loans, whether you have the capacity to go and invest in another properties, whether locally or overseas. In addition to that, during the breaks, go to their booth. I have my books, Mortgage and Grow Rich, for sale, subsidized by them. Bookshop $30, today you get $10. More importantly, I'm going to give you this summary. This TDSR summary, where we summarize what we have mentioned earlier on, plus ABSD, SSD, and LTV, all the acronyms, we all summarize for you in layman term. So it's only for $10, but we have limited copies, so make sure just grab your copies and it's only for today. So with that, really thank you very much. Pass back to ST Property.